Welcome back. You're still tuned into MF Corner. We still have with us Ankit Jain to talk about the entire mid-cap space, which has really been the focus this year. Well, Ankit, the next question which is really on our radar is, what is the cash position for your mid-cap fund now? What is the highest it's ever been? Because the report shows that several fund houses have increased their cash holdings recently.
Yes. Also, typically, we basically tend to have relatively lower cash position, in our funds. So historically, it has been maybe at around 2% of AUM, which maybe might have been inched up to maybe around 3.5%, 4% as of now. But still, as I mentioned, that there are pockets of opportunities in the market to really deploy, and that is how we are. We are trying to approach the market.
So is this the highest your cash position has ever been, Ankit, 3 to 4%, or it has gone above this? Any time through the past few years?
Yeah, absolutely. Maybe 3.5%, 4% might be on the highest side.
Okay, got that. So that is on the cash position. But now let's talk about, your strategy. For example, at this point in time, if you had 1,000 crores, which you had to put into the mid-cap universe, how would you really go about it? We've already seen a big run-up. So what would your strategy look like here?
Yeah, sure. So if you look into really, mid-cap is an excellent market segment from longer-term standpoint, given their potential to deliver higher earnings growth over longer time horizon. So if you really, but clearly it boils down onto the time horizon as well as the starting point of valuations, right? If you look into last 10 years, CAGR return in mid-cap indices has been around 21% CAGR. And probably half of it, or in fact, maybe slightly higher than that, might have been driven by the earnings growth. But even valuation re-rating has played a very, very important part to really deliver 21% sort of CAGR return over last 10 years. And as things stand today, clearly starting valuations, as I mentioned, that 23 times is on the higher side. So clearly from here on, really returns to be made, earnings growth has to do all the heavy lifting. So from the margin of safety standpoint and sectoral standpoint particularly, we will be very, very careful and really try to deploy incremental money around in the sectors where we are far more comfortable or with reasonable margin of safety. So as I mentioned, that maybe financials, pharmaceutical, consumer discretionary, some of these sectors incrementally we would like to deploy more and more money, and we are overweight on some of these sectors. But I will be far more cautious on fresh deployment across sectors like maybe capital goods, defense, which has seen an extraordinary run in the last couple of years. So having said that, as I mentioned that whatever corpus to be deployed in mid-cap fund has to be looked from the time horizon standpoint, maybe 5-year plus. I think it still continues to remain, I think, one of the best segment in the market. But clearly, I think return expectations from here on at this point of a time where valuations are, has to be more driven by the earnings growth expectations, and which we believe, given, I think, pretty good macros as well as micros playing out, I think earnings growth should still, I think, continue to chug along pretty well going forward.
Okay, all right. But Ankit, within the mid-cap space, while there are several opportunities, there are also names that can be extremely risky. So how do you play that? Do you think active is maybe a better way to approach the small mid-cap as well as the micro-cap investing space where there is an experienced fund manager making his pick?
Yeah, absolutely. If you look into India, it's still stock picker market with potential to deliver, I think, risk-adjusted alpha over longer period of time. Over time, yes, but I agree with you that with more passive money chasing into the index, magnitude of alpha generation might come down over time. So to that extent, I will still say that active continues to remain, I think, better bet, because as you rightly pointed out that because by playing through the passive, you are playing through each and every constituents of the indices, and maybe some of the pockets might be very, very risky to really bet on. And while really giving in money to some experienced fund manager, they can clearly decipher out, both of these segments. And as I mentioned that over time, particularly in mid-cap and small-cap segment, I think potential of alpha generation still remains.
Okay, Ankit, just going back to the previous question where, you were talking about financials, pharma, consumer discretionary. These are some pockets where you perhaps still see some value. But break it up for us. How are you going to allocate? If you are a fund manager now, you have to, put in, say, just break it up into percentage of what you would put into which sector.
Yeah, so typically sectoral allocation is also a function of maybe underlying benchmark sectoral weight. So to that extent, if we have to look into, let's say, midcap fund, which to follow Nifty Midcap 150 indices, clearly financials remains the highest weightage sector. Okay. So maybe around 20% out there. And even if, let's say, we are overweight, we will be overweight by, let's say, certain percentage out there. So maybe 1/4 allocation towards financials and then maybe followed by consumer discretionary and pharma. I think these three sectors put together may be closer to 45% typically. I think that should be the, pretty much right, right sort of allocation. Okay. And plus, let's say in many of the other sectors, it is again based on bottom-up stock selection. That is typically a diversified fund manager to work on.
Okay. All right. Well, Ankit, this has been a year where we've seen the SIPs go through the roof as well. The number of investors and people who've opened demat accounts as well come in at record levels. So what is your advice to a retail investor who's looking to invest in a mid-cap fund now? What is the minimum time horizon they should consider? And what is a good checklist to have when they are picking a mid-cap scheme?
Yeah, so as I mentioned, that ideal time horizon has to be 5 years plus while investing in the mid-cap fund. Ideally, longer is the time horizon, better it is. And in fact, higher is the chances to get benefited out of the investment thesis to play out, right? More so in case of mid-cap segment, when over time, I think a large amount of return is also being made by way of valuation re-rating over time. So if any fund manager taking any sort of a call, investment thesis to really play out, sometimes might take much longer. So to that extent, I think 5 year plus is a perfect time horizon, and through SIP mode is even sort of a better into the mid-cap funds. And that is what we have seen. Most of the data do also suggest that even SIP book within mid-cap mandates has also increased significantly over time. Clearly, the second part of your question is about picking up any mid-cap fund. What one should look at it is one is about the basically stability of the returns across market cycle, right? Because typically there is a higher volatility while investing into the mid-cap fund. So I think key checklist has to be that across the cycle, how the fund is performing. So that is the one sort of a key checklist. Second is clearly fund manager experience and investment philosophy. That remains, I think, the key sort of a aspect. And third is about, I think, the risk-adjusted return, which is typically being calculated through Sharpe ratio on yearly basis versus the benchmark. So I think on all of these three parameters, if one is trying to evaluate the mid-cap schemes, I think might throw out the better sort of a picture.
All right, Ankit, that's a very interesting and enriching chat with you on, how you can go about investing in the mid-cap space, and also interesting to get the fund manager's perspective of how you are looking at this pocket, considering that we've already seen such a run-up. So thank you once again for joining us on this edition of MF Corner. With that, from Ekta and me, it's curtains down on the show. Stay tuned. There's lots more action when we come back.